big news is Jerome Powell just came out with a rate decision. Did they raise rates? Did they lower rates? Did they keep them the same? Well, odds are they kept them the same, which is what happened. Spoiler alert. But what really matters is what Powell said about a pivot in 2024. And I want to get some quotes from different quote unquote experts in the industry so we can determine what Jerome Powell was really saying when he came out with what the market perceived to be a very dovish press release or a very dovish statement to the press. First thing, Dow up 400 points to record close after Fed says 3 rate cuts are on the way. So not we're thinking about raising rates or not that we're data dependent. It's 3 rate cuts are on the way, at least according to CNBC. So remember that they said this and how they said it, because when we get into some of the other quotes from Jerome Powell, you'll see that they really don't reconcile. And he's contradicting himself, which leads me to believe there's something going on underneath the surface that he doesn't really want you to know about. The Fed left rates unchanged, but said it plans to cut 3 times before the end of the year. In other words, pivot, reaffirming its previous forecast from December. And let's also remember that in December, or prior to December, they're all about being hawkish. Hawkish, 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 hawkish. And they're coming out and saying, oh, all that nonsense in the market about us lowering rates in 2024, just completely ignore it. Fake news. Then all of a sudden in December, he's like, oh, well, actually, it's probably not fake news. And now, even though we have had inflation surprise to the upside, at least inflation measured by the government, the CPI and some other metrics, he is coming out and saying, yeah, go ahead and set that aside. We're actually ignoring that, or we're paying attention to it, but that's not going into our decision-making process right now. And therefore, the dot plot is still correct. The central bank indicated it needs greater evidence inflation is easing before it starts taking its foot off the brake. And here's where you start scratching your head and you're like, wait a minute here. So you're coming out and confirming that you're definitely going to cut rates this year, but then you're also saying, in pretty much the exact same quote, almost the same sentence, that you need greater evidence inflation is easing before you cut rates. So how do you know definitively that inflation is going to come down or easing to the point where you can take your foot off the brake? Because remember, right at the top of the sentence, right at the top of the press conference, you said that you're definitely going to take the foot off the brake, but now you're saying you don't have enough data to do that. Help me out here. Obviously, it doesn't make sense. And what we've learned throughout, history, but especially going back to 2020, is when the central planners say things that don't make sense, that don't add up, 9 times out of 10, it's because they're lying. They're lying. There's something else that's happening here they don't want to really disclose. There's an ulterior motive, if you will. And let's remember what the Fed is all about at the end of the day. Psychology. In reality, their balance sheet doesn't have that much of a difference, or doesn't make that much of a difference mechanically, but psychologically, it absolutely does. So that's their power, is psychology. So they have to come out and lead you through this mental experiment, or lead you through this psychological game. Maybe that's a better way to say it. So you take actions in the real economy based on what their objectives are. It's a total psyop. It's manipulation, plain and simple. Getting on to the next quote. This is from Powell. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. Then how can you come out and say that you're definitely going to be cutting rates 3 times this year? See, again, this doesn't make any sense. So this is from Powell. Let me read that again. Nonetheless, we're looking for data that confirm the low reading that we had last year. Okay, so they're looking back at last year and saying we're looking for more data. And when we get that data, then we'll go ahead and raise rates. But how can you be confident that you're definitely going to get that data to the point where you're saying we're definitely going to be dropping rates 3 times this year? Next quote here. Strong hiring in and of itself would not be a reason to hold off on rate cuts, he said. Is Powell, adding, the job market by itself is not cause for concern around inflation. What? Are you kidding me right now? This is from the Federal Reserve that literally worships the Phillips curve. And just the video that we did yesterday on the Bank of Japan, what were they talking about? Price, wage, spiral. Price, wage, spiral. Oh my gosh, it's all about the price wage spiral. How many times have you heard about that in the media as they're quoting the central bankers? I mean, they just beat you over the head with it constantly. And now all of a sudden, Powell is coming out and saying, oh yeah, that Phillips curve dealio, doesn't really matter. Again, you've got to scratch your head and say, wait a minute here. You're contradicting yourself in everything that you've said in the past. Something doesn't add up. This dog don't hunt, right? Then he goes on to say an unexpected weakening in the labor market could also warrant a policy response. Wait a minute. The job market itself is not cause for concern around inflation. So the job market, now you're saying it doesn't cause inflation. But if we see weakness in the labor market, well, then that might force us to cut. This is, and you know what's unbelievable is people actually take them at their word. They don't even question this, the people in the mainstream media. It's really astonishing. Powell has perhaps shown his cards. He needs a good reason not to cut rates rather than a reason to cut rates. Markets, or inflation coming back down to their 2% target, markets perhaps couldn't have asked for more from the Fed, and equities will celebrate. Well, I agree there, but is the celebration justified? That's what you have to ask yourself. More on that in a moment. The Fed really wants its soft landing ending. Stronger growth, lower unemployment, high inflation, yet still no change in the median dot. Lower unemployment, okay. She emphasized that cutting rates before inflation is close to the 2% Fed's target, and while GDP growth is above trend, is a risky path. Okay, so let's think about this for a moment. It is true that based on your worldview, or the lens that you're viewing this from, it is a risky path. In fact, I would argue that it's extremely risky when you put yourself in the shoes of Jerome Powell. Why? Because he doesn't want to be remembered as Arthur Burns. That's probably priority number one. At the end of the day, he's just a human being, and he's driven by emotion. And at that age, as a guy, you're driven by legacy. So you want history to remember you as Paul Volcker. The worst case scenario is that history remembers you as Arthur Burns. So understanding all of that, the Fed is still committing to pivoting, dropping rates 3 times, while, to her point, inflation is above the Fed's 2% target. GDP growth is above trend. I don't know, above trend. Yeah, because the trend was down. But GDP growth is not negative. Let's just put it that way. And some would argue that there's positive signs there with the, especially the nominal GDP. So why would he risk this? Why would he risk all of that? It's not just risking the economy, it's risking his legacy. Maybe, just maybe, there's something that Jerome Powell sees happening with the economy, or maybe the global economy, that he's not sharing with you, that would lead him to commit to these rate hikes, to take a dovish stance, and make all of these contradictions based on what he's said on the past that really don't make sense at all. Or maybe they do make sense. Look, a lot of people accuse me of being a bearish or doom and gloom, or, oh, you've been predicting a recession for 45 years and it's never come true or something. Now, look, I'm just telling you what the yield curve tells me. That's all I'm doing. This is not George Gammon talking. This is the Fed's own metric, most powerful metric, according to them, for determining what the risk is for a recession or a hard landing. And if you go back and read everything that they said prior to 2021 or prior to the cerveza sickness, it's all about the near-term forward spread. They say that this is even more powerful than the inversion of the curve, whether it's the 3-month 10-year or the 2-year 10-year. This is the Fed's main tool for determining risk of recession. So you've got Jerome Powell looking at this near-term forward spread. And by the way, it's getting more inverted, not less inverted. And then he's looking at Japan. Then he's looking at the UK. Then he's looking at Germany. He's looking at the Eurozone, looking at Finland, Ireland, more specifically. And he's saying to himself, okay, what's the probability that all of these economies go into recession and the United States avoids it? Then you combine that with the near-term forward spread. You combine that with the curve. You combine that with all these other things that we talk about on the channel. And I think that's what makes the most sense. Now, Powell doesn't want to come right out and saying, you know, I'm really worried about a recession, and that's why I'm taking a dovish stance in the face of inflation not even being close to 2%, inflation still being over 3% for that matter. But that's why I'm happy to commit to this, because I see storm clouds. But I'm not going to tell you that, because if I tell you that, in his mind, it's going to be a self-fulfilling prophecy, meaning that you, the average Joe and Jane, are going to say, oh my gosh, Jerome Powell is talking about recession, so I'm not going to spend as much money. And if I don't spend as much money, aggregate demand goes down. And if you're a Keynesian, that is the worst case scenario. So I don't want to lead anyone to believe that there's a problem, but I still want to remain dovish. How do I thread that needle? And I think it's when you read what Powell actually said and you consider him trying to thread that needle, it all makes sense.